An exchange-traded fund, or ETF, a basket of securities that trade on an exchange, just like a stock does. An ETF is a marketable security, meaning it has an associated price that allows it to be easily bought and sold. ETFs can contain many types of investments, including stocks, commodities, bonds, or a mixture of investment types. There are various types of ETFs available to investors. Let's explore some popular options on the market today. Stock ETFs comprise a selection of stocks to track a single industry or sector. For example, a stock ETF might track automotive or foreign stocks. Bond ETFs invest in various fixed income securities, like corporate bonds or treasuries. Unlike bonds themselves, bond ETFs don't have a maturity date. Industry or sector ETFs are funds that focus on a specific sector or industry. For instance, an energy sector ETF will include companies operating in that sector, like natural gas, oil, and renewable energy companies. Commodity ETFs invest in commodities, including crude oil or gold. And holding shares in a commodity ETF is cheaper than physical possession of that commodity. Currency ETFs track the relative value of a currency or a basket of currencies, including foreign currencies. There's even an ETF option for Bitcoin. Inverse ETFs attempt to earn gains from stock declines by shorting stocks. Essentially, inverse ETFs are bets that the market will decline. When the market declines, an inverse ETF increases by a proportionate amount. While there are many types to choose from, all ETFs offer similar benefits: access to a wide variety of stocks, lower expense ratios, fewer broker commissions, and risk that is managed through a diverse portfolio.